Okay. Hi, it's Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century, in which I write daily of my vision of the future of money, in which Bitcoin is the center of the universe. Try my free 7-day trial membership and contact me at ahoffman@CryptoGoldCentral.com to arrange cryptocurrency or precious metal consultations. This week, my guest is the great Francis Pouliot, whose extremely popular Twitter handle is, not surprisingly, @FrancisPouliot. One of the Bitcoin community's most popular, visible, and concise communicators, Francis has become a fixture on Vortex's Bitcoin news show Sunday afternoons. Moreover, he is one of the most enterprising entrepreneurs with a broad knowledge of everything from transactions to storage and mining. Serving as the head of research at blockchain consultancy Catallaxy.com and the CEO of Bills.com, spelled BYLLS, an online Bitcoin payment service. To that end, welcome, Francis, for your third appearance on One-on-One.
Oh, it's great to be back. Thank you so much, Andy, for having me. I think we're going to have a really good talk today.
Absolutely. Now that you got through your traffic, we have some really good things to talk about. And of course, we're going to start with by far the biggest story of the day, which is yesterday morning's powerful price surge, following a week of the most suspiciously bullish price action since the bear market commenced 4 months ago. To wit, yesterday's crypto audio blog, End of the Crypto Bear Market, in which I discussed my tweets of the previous 4 days in response to obviously building price support that validated my ongoing belief that institutions are relentlessly buying above the $6,000 price level that represents a $100 billion market cap. Moreover, the resurgence of a handful of altcoins has caused Bitcoin market cap dominance to decline this week, most notably EOS, which we'll get to in a moment, which, while not necessarily based on fundamentals, is unquestionably a sign that capital is returning to the sector after a brutal 4-month bear market. Since the temporary Bitcoin peak in December, which coincidentally was when the Mt. Gox trustees started selling 35,000 for completely non-fundamental reasons, I have deemed this the first ever bear market without any bad news. To that end, Francis, do you believe the bear market is over? Moreover, give us your view on how Bitcoin's fundamental outlook progressed or digressed while its price was plunging 70%.
Right. So I'm not a trader. I don't like to do a lot of analysis, but I do obviously look at the price every day because all of my businesses depend on Bitcoins coming in and out. So I've obviously been following the price. And yesterday morning, when I woke up, I think everybody had a pleasant surprise. I think that was in 1 hour. I think yesterday we had the all-time fiat exiting Bitcoin of all time. I think it was like the most volume in a 1 hour candle, and it was just buy orders eating through all those order books. So may have been the largest, the most significant exit of fiat into Bitcoin of all time yesterday. So what I can say is that regardless of the price going up and down, the volume of transactions on all the merchant platforms, on all the OTC brokerages and all the exchanges has been actually going up. So, at Bills, for example, we're hitting an all-time high of people, using Bitcoin. Regardless of the price action, the whole momentum behind this price action has created a lot of new user adoption. As we were discussing before going live, there's a lot of users right now, which are Bitcoin users, Bitcoin believers, Bitcoin hodlers that don't even know what UASF means. So that means that they've been in Bitcoin for less than a year. So these are people that are getting added into our economy, strengthening all the network effects that we have. So that's definitely something that I've seen. So the fundamental value proposition of Bitcoin to me has inherently has not changed, but the perception by the public and the sophistication of it has definitely improved and increased. That means that Bitcoin is, as valuable today to me as it was, 4 months ago. But I think the public's perception of Bitcoin has definitely changed. For example, I'm seeing a lot of investors very interested in Lightning Network. So about 2 months ago, I think, I tweeted a report by the Royal Bank of Canada on its outlook for Bitcoin, and it was extremely bullish. And one of the reasons why it was bullish, they had 5 pages in the report about Lightning Network. So I think the communication of the Bitcoin advocates that, you know, Bitcoin is this censorship resistant store of value, you know, network protocol upon which is built other protocols which are useful for applications such as payments, but also sidechains, but also trustless timestamping with open timestamps, but also with all sorts of new protocols that are coming online. For example, to do smart contracts on top of Bitcoin, or, you know, tokenization on top of Bitcoin. And the investors are starting to understand that all of this is going to congregate to probably one large system. Another factor also that can, in my opinion, leads to the price of Bitcoin rising is that the profitability of mining has significantly decreased over the past 4 months. In fact, I think a week and a half ago or 2 weeks ago, we did a meetup, and we had calculated that all things being equal, you were making about 4.5 times less US dollars per week today than you were about 3.5 months ago. So a lot of people that may have wanted to invest in Bitcoin mining right now face themselves in a situation where it is absolutely, at least last week, it definitely was the right move to buy Bitcoin. I think also a lot of the people that buy mining hardware may have been selling their mining hardware to buy Bitcoin. If you're a Bitcoin miner and hodler, you're always looking at your opportunity costs of not increasing your Bitcoin stash. So if you're buying miners, for example, in order to increase your Bitcoin stash, it may be worth it sometimes to sell them when the hash rate has continued to increase and the price has dipped, so that you can convert your machine into cash right now to buy Bitcoins right now. So this might be one of the factors at play. But overall, I have to say that definitely the institutional interest is there. The interest was obviously peaked back in November and December, but these are slow-moving machines, and there's still a lot of work at the infrastructure level to do, both on a technical side for these guys to really jump in, but also on the regulation side, the fiat on-ramp, off-ramp side, the liquidity side, the financial market side. But I feel like all these pieces are moving together. Bitcoin is a huge decentralized machine, and it's full of entrepreneurs that are trying to fix these problems, because these problems are entrepreneurial opportunities. Obviously, if you can fix someone else's problem, they're probably willing to pay you for it. So I really strongly believe in this kind of emergent entrepreneurial ecosystem that is slowly fixing all those problems, bringing all the pieces together, where we get to a level where, you know, Bitcoin is AAA investment grade, which we know it can be. But it's AAA investment grade for the institutions, for large corporations to huddle, for large multinational corporations to rely on it for B2B transfers, for settlements and stuff like that. So this is starting to penetrate some of these institutions that usually have executives or leaders that are very ideologically minded and are like kind of imposing their DNA and thoughts on the corporations. But as an objective kind of analysis of what kind of tool can we use in our as money and finance, in a few years, I think starting now with this infrastructure, as I say, everything kind of coming together, I think it's becoming a very rational decision by objective, non-philosophically minded people to just start using, holding, and transacting with Bitcoin.
Okay, well, it's so funny when I interview, I forget about it. To all the listeners, now I've done like 30 something of these things. There are two people that I interview that when I do, I am busy scribbling notes like nothing before, because they bring up so many good points. So Francis, it's a tie between you and Simon Dixon, the people who come up with the most amazing points in one paragraph or dialogue. So first of all, I just want to comment. We're talking about, again, there's debate about whether yesterday was the biggest 1 hour volume in Bitcoin history. I think depending on what exchange you look at, you could say it was. And even if it wasn't, or if it was close, that is a spectacularly bullish and important inflection point to see that in this time of maximum bearishness, of maximum negative sentiment, to the point where people just seem certainly in the investment part of the world, like they don't care anymore. Out of nowhere, and according to all the big experts, there was, quote, no news out there, the biggest hour of volume, or as you put it, the most significant exit of fiat to BTC in history occurred yesterday morning at a time when everyone was expecting prices to go down. So, that's one of the reasons why I immediately put out my audio blog saying end of the crypto bear market, because again, there is no bad news out there. And clearly there's a lot of institutional interest that was sitting down there. Certainly above $6,000 has always been my number, because that's where it's $100 billion market cap. And that's where they came in. And that's where they're sitting with the institutional put. Now, the other thing I wanted to bring up about this surge is, if I hear one more person say that it's because of tax selling, meaning people selling their Bitcoin and crypto to pay for taxes from last year, it is the most ridiculous thing I've ever heard. They get it because this guy, Tom Lee, who CNBC loves because he used to work for JP Morgan, said so. There could be 25 billion of profits. Yeah, I'm sure there are some profits, but most people did not buy low and sell high. And most people, according to the IRS and according to Coinbase, they don't even report their profits. And even so, how come we don't get the stock market plunging every year in March, even though it's been up like for the past 10 years? No, it's because there's a lot of negative sentiment. There was a bubble in altcoins that had to be worked off. It may not be completely over, but I sense that it is. And when you have this kind of sentiment, things like this happen. People come back in, and we may very well be right back on track, because as Francis said, I mean, he's actually shocked me with what you just said, Francis, by saying that the number of transactions you're dealing with in real businesses, Francis deals with business. He's not dealing with, buying and selling, trading on exchanges. He's dealing with people who are using it in business. And he's saying that transactions are going up at the same time that trading transactions are going down, which means adoption is going up. And of course, if he's getting all of this interest in Lightning Network, we're talking about the basis of it being used as money, transactional money, a lot sooner than people think. So, Francis, my guess is that you believe that the bear market, there never was a bear market in actual Bitcoin usage, it's just in the price. Am I missing something?
Well, I mean, clearly there was a bear market in trading, right, over the past 3 months. So that's obviously visible on the charts. But I think the point is, there's not been a decline in Bitcoin use, or there hasn't been a disinterest by or any kind of decrease in Bitcoin's value proposition. I mean, right now we're talking about Bitcoin. The flippening is definitely not happened. It's not happening. There's no, to me, major negative event in Bitcoin. Perhaps there's a slight annoyance of Bitcoin Cash. But
which flippening are you talking about? Ethereum, Bcash?
All of them, all of the announced flippenings. My blockchain is going to do 1 million transactions per second flippenings, and Bitcoin 2.0, Bitcoin 3.0. There's been the blockchain tech flippening with Hyperledger, and then the ICOs, and I mean these trend shifts, right? Because even though we know that Bitcoin is in a separate market from the altcoins and the blockchain tech. It's not like one blockchain technology thing in which Bitcoin is in. Bitcoin is its own separate category. But a lot of people don't see it like that, right? So they look at this thing as one big pie, and it necessarily, as these altcoins come and go, the investor's perception of Bitcoin's value proposition changes, right? So in an unsophisticated investor's mind, Bitcoin is like competing against the altcoins or the blockchain tech. So he's hedging himself in these different technologies, which is a terrible strategy, because as we all know, if you look at just diversification of portfolio in alts, I don't think it has ever historically worked. But I think I want to talk a little bit also about the value proposition of Bitcoin itself, because as the ICO fever has hit its peak, I think we all had some time to reflect as to why are these obvious scams and smoke screens and really terrible projects, why are people really convinced they have value? Why do people value them that much? So it's been really difficult for me to try to explain like fundamental value. And the way that I've kind of focused it these days is, you need to focus on what's, and by the way, have you read Saifdan Amnu's book, The Bitcoin Standard?
No, because I know of it. I have not read it, but it's
right.
Very sound money focused.
Right. So I think we came to the similar kind of reflection. I think it's a reflection which is starting to it's kind of a philosophy which is starting to take hold of the crypto community, which is what you're really trying to explain to people is not the utility of the coin. Is mostly, I think, people misunderstand the scarcity of the coin, the scarcity aspect. So if you think about, when people say Bitcoin is scarce, you say, oh, it's scarce because there's only 21 million Bitcoins. You can't print more Bitcoins. There's also another reason why Bitcoin is scarce. It's scarce across tokens as well, because Bitcoin is the only thing, has the only thing that is really incredibly difficult to replicate, and it's these intertwined network effects upon which it is built. So you have proof of work, right? Proof of work is a huge network effect. The mining, the manufacturing, all the pools, all the logistics, the supply chain, all the investments that are into mining, that's a huge network effect. And then, as Trace Mayer explains it, his 7 network effect, his 7 layers of network effect, this is probably one of the best framework to understand why Bitcoin has value and is, but also mostly why Bitcoin is scarce, right? So you got these open source developers, you got these merchants on top, you got these early adopters, you got these holders of last resort. So holders of last resort are possibly the rarest thing in any of the blockchain systems, because in the fiat world, lenders of last resort are what allows a system to exist. And in Bitcoin, the idea that some people will always hodl is what gives people confidence, right? That, there's some kind of support for the price. So if you look at all these things together, you can't replicate them across blockchains. Well, when you look at Ethereum, for example, what's the fundamental value proposition of Ethereum? I would say, well, it's censorship-resistant apps, right? But most of the use case that I'm seeing, the Ethereum Enterprise Alliance, all this institutional adoption of Ethereum, they're just running Ethereum on private test nets. Some of them are running Ethereum on the test network of Ethereum. Some of them are building on clones of Ethereum, like Neo or all these other blockchains that are exactly copies of Ethereum. And when you look at that, you're looking at it and saying, so what is the fundamental value proposition of Ether, right? Because all the things that people actually value, like the programmability, the Solidity language, the Ethereum virtual machine, the fact that you can deploy, some dApps really quickly. These are things that are not scarce, right? They're transferable across blockchains. So people that want to hold Ethereum as a long-term investment, and Ethereum is a good comparison to Bitcoin, right? So when you look at Ethereum, right, the value proposition of Ethereum is that people use it to buy gas, right? So it's scarce in the idea that there's not a fixed supply, but there's a predetermined supply, but it's supposed to be useful and in demand because people will use it to buy gas. And by definition, right now, you're saying that the velocity of money is gonna give it its value, right? So the fact that people spend it on gas is what is gonna give Ether its value, whereas that's not what really gives money its value, in my opinion. What gives money its value, Mises talks about that, is like the regression theorem, is that people believe in the increased purchasing power of the thing because people are gonna want it in the future. But in the case of gas, if you look at it, why would you pay for gas when you can execute your server on Amazon or execute your server on any other blockchain? So why would you pay for the gas on the main Ethereum chain to execute your smart contract? Is because you're looking for censorship resistance. But the only censorship resistant kind of use case for Ethereum is, the way that I see it, is ICOs, right?
Well, the answer to your question is, why do people buy the Ether, the gas, instead of the they buy it because they think that it's going to go up. They think it's a tech stock. They don't understand that there's a big difference between buying Cisco in the year 1999 and buying this today. In fact, the reason we had the big bubble in general was because, again, the crypto hedge funds all came in January 1st. I screamed it for months. The hedge funds start January 1st. They can't buy Bitcoin. Well, they could buy some, but they have to provide alpha. So they diversify. Ethereum is the second biggest. It's a very sexy story. It's got this young Russian in charge. It's by far the biggest. So it's like one of the only liquid ones out there. So they bought it like crazy and turned the whole thing into a bubble. And the thing is that Ethereum is, to me, it's a facilitator of bad things. It's like a drug dealer, because its job is to help other people create terrible things, and to, in many cases, to fund themselves with Ethereum. And again, like you said, it's got all these competitors. I mean, you're jumping ahead to all the questions I was going to ask when we talk about Ethereum. It's got a million competitors. We'll talk about EOS in a second. There's Neo, there's Cardano. Bitcoin with rootstock, all these things can do exactly what Ethereum could do, and they don't have the centralization issues. They don't have the proof of stake versus proof of work wars, the Ethereum Classic and ASICs and all this stuff. So yes, but to get back to, and we're going to move ahead to that in a second, but, summing up, everything you just said, all the amazing things about Bitcoin. Look, it's got monetary value. It's scarce. People, you also understand it's secure. So you can buy all this other crap, but it doesn't have a secure network. It's not liquid. It doesn't have all these utilities. It's not going to have all the things Bitcoin's going to have. But to sum it up, what you said was that institutions are thinking down the line that Bitcoin will be AAA investment grade. That is such a powerful statement. People, let it resonate in your minds that there's only a handful of things on the planet that are rated AAA. And most of those things don't compare to what Bitcoin's going to be.
Yeah, so, and even to sum up what I mean about the value of Bitcoin is, Bitcoin is useful. Bitcoin has value because it's useful and scarce, like all things. And the value is subjective, right? The value is given subjectively by the holders of Bitcoin based on Bitcoin's inherent properties. And when you look at the other alternatives right now for investors, they are useful, but they're not scarce, right? The properties of what people want as useful are not scarce. Ethereum is not scarce because smart contracts are not scarce, because programmability on a blockchain is not scarce, because decentralized ledger technology is not scarce. In the case of Bitcoin, it's really truly the only digital scarce asset. So in this sense, the fact that it's the most difficult thing in the world to replicate, to me, it definitely has a super strong long-term value proposition, because I don't think that's something that's possible to replicate in the near term.
Right, and of course, Ethereum and almost all the other ones have no supply limit. I mean, it's not scarce because there can be as many Ethereum as Vitalik Buterin wants there to be, and you throw in the proof of stake, and it'll be an infinite.
Yeah, I mean, think of it. Think of it like this: if you can fork it and do the exact same thing on the fork and nothing changes, then your coin is completely valueless, right? Because anybody can just fork it and do the same thing. It's kind of like the way that I talk about Ripple. So people assign. There is no link between the value of the technology and the momentum of the brand and whatever. There's no link between that and the actual value of the underlying token. So it doesn't matter if Ripple Technology and Ripple Labs have partnerships with all sorts of banks, because from one day to the next, the banks could just say, "Hey, we'll just use Ripple's open source tech and launch a private Ripple settlement network between us, and we'll choose our own unique node list, and we won't have Ripple's token, which is associated to all sorts of securities problems." So if you're holding Ripple and you're looking at all those press releases about partnerships with banks, you need to understand that all of this does not in any way create more actual real demand for the Ripple token. Right. So and all of this can be done also by by another blockchain, by open source software. So your token is also not scarce. So this is the difference between Bitcoin and those technologies, is because when you see that the use case of censorship resistant transactions of sound money is becoming more and more popular, if you see all that momentum and narrative around that being popular, then you can be assured that Bitcoin is the only one that delivers on that product, on that demand. Sorry.
I mean, it's truly amazing because, from the way I read it, because again, I'm not a tech guy, I don't really understand how a lot of these tokens work. But from, I listen to smart people like you and others, and they say, the Ripple token isn't even necessary. So you go, so I'm supposed to believe that this is going to be like this huge investment that's going to go up, even though there's really no need for it even existing. It's really just they put it out there so people who don't know, like, yeah, I'll buy it. I'm buying stock in Ripple, but you're really buying absolutely nothing.
Yeah.
And you're buying a supply that's unlimited, that's also controlled by a handful of people. And the thing people need to understand, again, I worked many decades on Wall Street and stocks and everything. At least if a stock, you look at, let's say Apple, okay, and forgetting stock splits, it's, I don't know, got 1 billion shares outstanding. But when, let's say Apple increases its supply of shares, it's for a reason. Like if they raise money to use the money to do something, what the analysts will do, they'll say, is this incremental to, what's the word? God, there's a word where you say, is it good for earnings if you do the stock offering, because it'll get you something. And I did this for 15 years, and I can't remember what the word is because it's been so long. But the point is, when they increase the supply of shares, it's for something that helps make it more valuable. In the case of almost all alts, and that you see they have no supply limit, it doesn't do anything. It doesn't make it more valuable when more are issued. So it's not like Ethereum becomes more valuable when the proof of stake gives people 5% more per year, or if Vitalik Buterin decides I'd like to have another 20 million in the float. It does absolutely nothing except dilute the value. And right now people are just buying these things completely clueless about the economics of how actual securities work, which is essentially what all these things are. Which is why when you are buying for investment in this sector, if you are not buying something with a cap, you're crazy, because you're asking for something bad to happen. Is the way I look at it.
Yeah, absolutely, absolutely. And the Rube Goldberg machines that make things more complicated than should be, they don't stand really the test of time, right? So you have to look at for me, the common denominator when looking at those things is, can the objective that X token or X blockchain is trying to achieve be done without a blockchain? And if not, can it be done with Bitcoin? And most of the times, this can be done without blockchain. You look at okay, you're gonna have this new blockchain, whatever, has smart contracts, a great a global project of decentralized airplane insurance on the blockchain. Can this be done? Can airplane insurance be done effectively without blockchain? Yes, of course. Can it but can you have more efficiency in airplane insurance with Bitcoin? Yes, you can. So the token is useless, and over time people will filter away those use cases. So when you look at these tokens, they're usually machines that are complexifying existing systems, and in some way magically they extract some rent from the system. They're just trying to solve a problem with a really overly complicated solution that they're selling, and from which they rent from. And it takes a long time for the market and for the time to whittle away those projects. They have a really, really long runway. So it's really important to not look at those projects as still existing and seeing that as a positive sign or a good sign or a sign that they're progressing, because those ICOs and those projects have a huge runway, because they're obviously all pre-funded and they get all the money in advance. But this is also the reason why they won't stand the test of time, is that most of them have zero market feedback and they're not actually solving a useful problem. So they don't actually have real hands-on consumers. So as they're developing their technology in their ivory tower, trying to solve imaginary problems with some imaginary technologies, and they're trying to kind of reverse engineer how society work and try to make an ICO and a coin from that. They're completely removed. They're completely removed from the reality of the market. But it's going to take time for the effects of that to be seen, as I said, because they have a really long runway. But yeah, so don't take that as a sign that the ICOs continuing to work on their technology. I think someone tweeted today that Ripple's business strategy is that they have 100-year of runway, and there's more than a non-zero probability that they'll eventually make something useful. So that's
and the same could be said for Tesla. It's the perfect example. Massive valuation, even though if you look at it, you're like, what are we paying for? Electric cars? Everyone does electric cars. Space mining, that's never going to happen. This thing in California, they're going to have like a Star Trek. I mean, it's all BS, and yet they have a very long runway. And again, there's all these big pink elephants, because right now the vast majority of people investing in the sector, and I mean vast, as in like 90%, including myself, have no clue about the technologies of what's going on. At least I understand as a Bitcoin maximalist that I'm buying for monetary value. But most people have no idea what Ethereum actually does, or any of the other ones that don't actually do anything. So they are not investing right now in technology. They're not investing in anything that actually gets done. They're just investing in speculation. Like, what will everyone think is going to go up next? Privacy coins? That sounds good. Let's buy that. Oh, then there's platforms. Oh, everyone loves anything that's a platform. Oh, Dan Larimer's doing a platform. Let's buy that one. Whatever it is, they don't even know what it is. And the big pink elephant in the room is Bitcoin subsumes just about everything.
And EOS, EOS is a great example of that.
Oh, yes. And
we can talk about EOS.
Before we get to EOS, okay, because I want to introduce it. It's impossible to keep up with Francis. He jumps on my topic because EOS is something I just want to give a little introduction before you talk about it.
Yeah,
because I was going to say before the big surge yesterday morning that this EOS was literally single-handedly holding the whole crypto sector up. So I started to look into it, and I knew, okay, it's some kind of platform. And again, you know, there's Cardano, there's Ethereum, and there's Lisk and Neo, the Chinese platform. But what's with this one that's going on? So I looked into it, and apparently it's this Dan Larimer, the guy who started Steam, started this thing. The ICO has been ongoing of this EOS for the past almost year, and the launch is going to be June 2nd. So it's clearly pumping up on hype about the launch, in which, by the way, there'll be 1 billion coins outstanding with 5% in proof of stake inflation and whatever else these guys want to add to it. And if you look at the buzzwords, like I watched this 10-minute video, Francis, where this woman was talking about all the things it could do, and it's just a sea of buzzwords. And I'm going, but what the hell do they do? They're an Ethereum killer, but I don't even know what Ethereum does. And it's the massive amount of hype behind this thing. It's already up to a $7 billion market cap, even though it was up to like 20 billion in January. Tell me, is, you know, based on all you just said about Ethereum, and I mean, is EOS like a scam, or is EOS just another one of these things that's a giant hype machine, or could it actually do something?
I'm by no means an expert in EOS, because every time I think about EOS, I just regret having spent like my brain power on EOS. I'm like, why did I could have thought about something else. I would have been more useful. But EOS, you can't help but think about it, because it's kind of in your face when you look at CoinMarketCap and when you look at all the Reddit and Twitter news. So, you know, EOS is the third blockchain by Daniel Larimer, or maybe sixth, depending on how you count. Like, there was BitShares in the beginning, which was launched by Daniel Larimer. So the original Bitcoiners will remember the first BitShares. So like Larimer is kind of like an ICO pioneer, right? So he created BitShares back in 2013. I can't remember, 2014 or something like that. So BitShares, actually, when I first got into blockchain, like BitShares was like the thing. You could like issue shares on BitShares, and you could create DAOs on BitShares. Like one of my buddies did an ICO on BitShares in 2014. Like before ICOs even existed, it was called. He was just launching the blockchain, I guess, or I don't know. I don't even know how we called it. We called it notes, like instead of ICOs. I don't know. But so that was Larimer's thing. It was, you know, a spectacular, and it's super intricate and complex. It had this crazy ecosystem with like stable coins and all sorts of things. It was really like Ethereum. Like they had a decentralized exchange, and it just didn't work. And then Daniel Larimer went on to, and then they had also like secondary derivative ICOs. They had angel shares and proto shares, which I think were kind of like airdrops. They were airdrops, right? So it was kind of like an innovative airdrop where you would, I can't remember. Anyway, it was super complicated. The kind of like, you know, Rube Goldberg machine I'm trying to describe, right?
Well,
and then
kind of like Steam with Steam powered dollars. And
yeah,
Steam
exactly
dollars
like
and
Steam. So
I mean, it's crazy. Yeah.
yeah, so Steam is incredibly complicated set of rules with all sorts. There's a very small, and I actually know about Steam because I know someone that was like a Steam, like it was a crypto guy that was super into Steam, so he could see all the loopholes and all the Steam things, and could analyze the Steam game theory, and like people were posting all sorts of, you know, there was like all sorts of like insider knowledge. If you really know how the thing works, and if you got the meetups, and if you're like, you can like extract your rent from the system really easily, right? So it's kind of, it's super weird. Like I don't want to use any label. Like I'm not going to use any word to describe it, but it's like, anyway, and EOS is definitely in that same, I think that same continuity. So I learned about EOS when I went to Consensus Conference in New York last year in May 2017, because that's, before that, EOS didn't exist, and they were like the main sponsor. And I had no idea what EOS was, but EOS was sponsoring open bars for everyone, you know, after the conference. So, you know, whatever, I'll go to the EOS thing. And then everybody was like handing flyers of EOS, and I'm like, what's EOS?
So this is his money. He was trying to create hype by spending his money.
I'm not sure it was him. I'm not sure who it was, but there's
There's
like,
angel investors, yes.
so you know how these
Mhm.
these blockchain ICOs work, right? There's like the pre-ICO people that have some kind of, consortium or arrangement where they pool resources in order to, pool resources, right, in order to launch the ICOs and blockchains. So I mean, EOS was the sponsor, and it was super weird. Like they were, it was really really pumping, like pumpy. It was like super over the top, obscene. um they had these kids like pushing us, and when I realized it was like a blockchain, I was like, oh my god, this is such a scam. And I was like, oh, this is Larimer. Okay, so this is Larimer's new thing. And then I start looking at it, it's like 1 million transactions per section, zero knowledge proofs, smart contracts, better than everything. And I'm like, the kids are like, there's like kids giving flyers, and then eventually I'm like arguing with the kid, and like a 20-year-old kid, and he's like, we just paid to distribute the flyers, man, just chill out. So they were like paid, or they got like $100 like to hand out flyers. And then they rented the New York Times like jumbotron, right, during the consensus conference. And they had like huge announcements, so it was like so over the top. And then they had a
You
launch
mean
party
you mean in Times Square?
in Times Square. Yeah, in Times Square. And they had a launch party on a penthouse, and there was
Wow,
like
that's a lot. That's a lot of money. Yeah.
women and like, very sparse clothing and champagne, and like, all sorts of people, EOS, EOS. And it was like
And
kind of a
you know what
BitConnect.
other crypto has that exact same background?
Yeah,
BitConnect.
yeah. It had a
Yeah.
BitConnect vibe to it, right?
Yes.
Yeah, it definitely had a BitConnect vibe to it. So I'm like, okay, this is, my first thought was like, I want to buy this because these guys are masters at the pump. Like, obviously, clearly, like they went all out. So my first thought was like, I'm gonna buy this. Like, these guys are gonna pump this to the moon. But then I was like, nah, I'm not. Like, even if it's, screw that. So EOS, the way I even understand it, it's not even a thing. It's just an ERC20 token that they're just printing over time. And that ERC20 token is, I haven't read the, like, I think like to really know what it's for, you would need to read through like probably 150 pages of stuff, and like forums, and watch all the videos. But I think it's redeemable in the future, possibly for EOS related blockchains, or there's like, you have a hope of an IOU that can be redeemed in some place. But in the meanwhile, like, people are trading EOS just based on the news. But it's so insane. Like, people are trading this non-token based on the news. It kind of reminds me of, storage coin. The storage was one of the first ICOs, and they did a second ICO, and you had to redeem your first ICO for the second ICO. And then at some point, they just stopped the redemption, and they said, well, the old storage
Yeah.
will not be used in the storage platform, only the new storage. And the old storage was still being traded,
And the
even
only
though
and
it
the
was
only way
never gonna be in like in the storage platform. It was officially like dead, like decommissioned, but it still was trading. And so people are trading these things that just don't exist.
right,
Well,
and the
it's,
people, and to buy the 900 million EOS, that, not including the 100 million that Larimer and his buddies own, you had to buy it with Ethereum. I mean, this is what I'm talking about with Ethereum creating, as I called it, an inadvertent Ponzi scheme. It was nice that there was a demand for Ethereum to buy things like EOS, but EOS is trying to compete with them, for one, theoretically, and two, it's like Peter, paying Peter with Paul, just money circulating around this system from one scammy thing to the next,
yeah.
Using each other's tokens. And then, of course, you see EOS going up against Ethereum because they're obviously selling their ether. And then I'm listening to what other people are saying. I was listening to what Tone was talking about. I mean, this is so. I mean, I was going to ask you. My second question was, is the now that let's say the bear market is over and we are going up, and you could see already, it doesn't take much to see that already altcoins are soaring. As soon as Bitcoin has its turnaround moment, you look up at CoinMarketCap and all the altcoins are exploding higher, indiscriminate buying, doesn't matter what it is. So I guess the question is, are altcoins going to slow down anytime soon? Is probably no. But this whole thing with EOS is just screaming out to people of the dangers that are still in the market and that people are going to have to deal with down the road.
Yeah, and I'm a terrible trader because I look at the fundamental value proposition. I look at the long-term scarcity. I look at all the intrinsic properties of the money I want to hold. And for example, when I met two young guys that came at the Bitcoin Embassy in 2016 and say, "Hey, Francis, we remember you. We came at the Bitcoin Embassy. Ethereum was $2, and you told us not to buy it. It was gonna go to zero." So I'm the worst trader because I look at the fundamental value proposition, but the market is definitely not me. Like I am not the market, and when you're trading, you need to understand what the market is. So you're correct that these coins will not go away because people don't have the kind of discussion that we're having. This is not the kind of mentality that I think most ICO investors and most coin investors are. I think it's mostly, I think some of them may know that they're gambling. I think some of them may know that it's a game of hot potato or a Ponzi scheme, and they may think they're going to be the first one to exit. Some of them may actually believe in the idea that investing in this coin means investing in the future, and it's kind of like investing in Google in the 1990s. Some people may have that actual belief. So these altcoins are definitely not going to go away, but I think they're just going to kind of cycle themselves, right? They're just going to, one of them is going to go away, another one's going to replace it. So even if EOS is like something real, as I said before, like they are, there's nothing in EOS that can't be replicated because there's like probably 25 blockchains out there that are competing for the exact same use case for EOS, like smart contracts or whatever kind of DAOs and whatever kind of token creation platforms that are out there. So is the Bitcoin, bear market over? I don't know. I mean, this all seems really familiar to me. I remember when in 2013 the price of Bitcoin went up a lot. This is really familiar, actually. The price of Bitcoin went up a lot in 2013. Kind of did this, double bottom, then went down to 600 when Tim Draper bought the Silk Road Bitcoins, the Silk Road auction, used Marshall's auction Bitcoins, then went down to about 300 and went sideways for a little while, kind of hitting that resistance of like 300 US, and then started to go up and up and up and up. So maybe we're headed to like a side market for a few weeks. I don't know if the bear market's over, but definitely I think as the year 2018 progresses, I'm very bullish on Bitcoin. I've always been very bullish on Bitcoin, but I'm not sure if the bear market's over, but the value proposition, as I said, is shining. I think the kind of discourse and narrative that we are having right now, that is kind of the branding of the World Crypto Network. Call it whatever you want to call it, pragmatist, Bitcoin maximalist, skeptic, people that understand what they're buying into, the monetary aspect of Bitcoin, the financial sovereignty aspect of Bitcoin. I think this narrative is becoming more and more popular. And what that's doing, it's adding, layers of hodlers, as time goes by. And, Bitcoin is kind of a one-way street. Once you become a hodler, you can't, philosophically, I don't think it's really easy for people to unbecome hodlers. Like once you're convinced in Bitcoin's future impact on society and economics, I don't think you can kind of forget that or unlearn that or, stop thinking that. So it's kind of like a one-way street. So what I'm seeing is people, when the price went down to 8,000, I got a lot of phone calls. Like people buying the dip. Just people are like, oh, I bought at 8,000 in November and now it's at 8 Canadian, for example. I bought at 8,000 Canadian in November. Now it's at 8,000 Canadian again. During all that time, I wish I had bought more at 8,000 in November. So here's my chance to buy more at 8,000 now. So that's what I'm seeing. I'm seeing this price support of hodlers that are like, nice. This is a way to average down. This is a way to increase my Bitcoin stash right now. So I think that's really positive. That's kind of the only thing that I can say is what I see, and what I see is hodlers, buying the dip.
Right, and of course, I mean, I don't know if I've used the term more than double dog years in the last 6 months to describe how no matter what you see in the sector, the pace of whatever it is, whether it's investment or technology or politics or government decrees, everything gets faster and faster and faster. So I mean, a lot of people want to say, well, look what happened to Mt. Gox. It surged and then it collapsed and then it took 2 years of consolidating. So you got all these people saying, yeah, well, that's going to happen again. I'm going, well, I mean, ridiculous. I mean, first of all, I mean, no one even knew what Bitcoin was back in 2013. Yeah. It's a completely different world that had a market cap at its high of about $15 billion.
Yeah.
And of course, now it's secure. The scaling issues are done. It had at its low a market cap of $100 billion. And of course, it really is making an impact on the world. Institutions are watching it, governments are watching it, et cetera. And so, yeah, what we just experienced was a bubble. I would say the bubble was 90% related to altcoins. I mean, yes, Bitcoin probably got a bit ahead of itself, given that it moved from basically nothing to $350 billion in a very short period of time. But it was also accompanied by real world accomplishments like winning the scaling debate and SegWit and all that. So yeah, we had a bubble. The bubble has to consolidate. It's been consolidating in Bitcoin for 4 months and altcoins for 3 months. You know, I could argue that that's the equivalent of 2 years of consolidation way back when. And, you know, based on what again, you're talking about hodling. Again, we're scarce people. There's not that much Bitcoin out there. And it's not that there's 21 million Bitcoins. There's probably only a couple of million that are even available for sale at any given time. And guess what happens when you have stuff like this and there's institutions around? They buy and they add to their positions. And institutions, this is chump change. They're not even thinking about, oh, I got to sell it when it goes up. If your institution buying it at 8,000, you're going, I'm holding it for 100,000 or a million. It's nothing. So again, there's just, you know, the supply exhausts itself very quickly. And when you see, again, we're talking about alts and everything, the amount of money, I mean, one of my first articles at CGC, it was like 7 months ago, was trillions will enter the space and probably half of it will go into Bitcoin. Well, I mean, we're talking about 200 to 300 trillion dollars of legacy financial assets. And in my view, stocks and bonds are archaic. I think that you're going to see a huge market share loss. Gold is archaic as well because of the monetary values of Bitcoin. I mean, we're talking about trillions moving in. So look what happened in January when a tiny, tiny piece of trillions went into the sector, created a bubble. And we just are getting started. So people, you are going to see all kinds of crap get bid up. Over time, how much of it is going to outperform Bitcoin is the question. But some of it will. But it'll be at the expense of security and liquidity and all kinds of things. But you know, people just need to realize how much money is going to be coming into the sector. So I guess, Francis, you know, if I was going to ask you, you know, what do you think altcoins will do in general versus Bitcoin? I'm guessing that you would say that for some time with your long runway, they're going to do very well. It's just that any given one on any given year or month could be the one that's the disaster.
Yeah, I mean, altcoins are gonna keep doing well as long as the asymmetry of information lasts. And we've seen how easy it is to invent complicated things and create an information asymmetry between the let's just call them the token issuing community and the token buying community. So as long as that information asymmetry lasts, I think there's going to be, that market. But regarding, Bitcoin, I want to also mention Tim Draper's prediction that he did yesterday. Have you seen that?
No, I didn't.
So Tim Draper predicted Bitcoin price of $250,000 by 2022. And he's so confident in that prediction that he actually hung a massive banner outside of the Draper University saying, Tim Draper predicts $250,000 Bitcoin by 2022. So I thought that was really awesome because that's such a powerful statement. What he's saying is, you will never be able to say that I didn't say, that I didn't told you so. And I was looking at, how is he calculating that? I don't really know. And I was looking at, oh, well, that's 1.5 years after the next halving. So the next halving is going to be in May 2020. So 2022, January 2022 is going to be 1.5 years after the next halving. And then if you look at, the peak, the last halving, I think I remember was summer 2016.
July,
so
yes.
Yeah. So the peak after that was the Christmas 2017, which was the last bubble, and then I was just while we were talking, I was looking at the last halving, which was it was in November 2013. So a year and a half after that, that was kind of it was a year after that that you had the 2013 bubble. So it seems like every year and a half after a halving, there's a bubble, and the bubble increment has been tenfold, right? So the first bubble was from was 1,000, and then 20,000. So 200,000 after a year and a half after the next halving seems within the continuum, right? It definitely seems like it's within the continuum. And one thing I want to mention about bubbles and these periods, I think we can call them periods of violent price discovery, where money is moving from one to another, to one place to another. Liquidity is being exchanged. It's chaotic, but it's a price discovery where traders and speculators and institutions and the hodlers are kind of battling it out, trying to see what's the optimum price level for Bitcoin and where everybody's happy with it. And once that price is discovered, then that's when the institutions that are a bit less risk averse say, okay, so the market seems to be in consensus right now that Bitcoin's worth about 6-7 grand, and our forecast shows that it could be 20, 30, 40 grand. So since that violent price discovery period is kind of past, and we kind of have some it appears that a consensus on the Bitcoin resistance level is emerging, then we can enter and speculate on our future outcome for Bitcoin. So yeah, regarding the future outcomes, I mean, guys like Tim Draper, they have skin in the game. They bought into Bitcoin a lot really early. So the fact that they're making those predictions very publicly, I'm not at all offended by that. I think that since they're all in and they're probably going to be the last out, they can permit themselves to do that. So if guys like that are making such bold statements and are actually, committing and following through and defending it in public, all these figures are emerging. People notice, right? People notice that these are people that seem to not want to compromise, go back on their word. They're committed. So that just reinforces the idea that there are, these hodlers of last resort, and bringing the confidence to the new Bitcoin users that there's going to be someone to sell to, right?
Yeah.
So guys like Tim Draper, they will pick them up. When the U.S. government dumps all the Silk Road Bitcoins on the market, guys like Tim Draper, they'll scoop them up. So that's a really powerful message, I think, that is reflective of my view of the long-term outlook for Bitcoin.
All right, Francis, did you have to bring up the halving? Okay, now you have a whole new area to explore. Okay, so again, here's how I'm going to add to this. Again, I was a Wall Street analyst for many, many years. I've been a CFA for 25 years. There are some concepts. I mean, I've said for a long time that the concept of financial analysis, which obviously you understand, most people on Wall Street don't even get it anymore. I mean, I talk all the time about the fact that people are always valuing altcoins as a percentage of Bitcoin. And yes, I guess you can look at Ethereum and say, well, it's 0.05 one day, it's 0.1 the other day. But the point is they have completely different amounts of shares outstanding. And so on any given day, it's apples to oranges. And yes, if you're talking about Bcash versus Bitcoin, okay, they have basically the same shares outstanding. It's a good comparison. For everything else, it's kind of ridiculous because there's two different things. So, when you talk about people get all crazed, they say, oh my God, $220,000 is Tim Draper pie in the sky. And I'm saying it has nothing to do with the amount per coin. The whole point is Bitcoin is scarce. So, I mean, so $220,000 is not that much. In fact, I just did the math. $220,000 is less than $4 trillion market cap. I mean, $4 trillion, we're talking about there's a legacy financial market out there right now of $200 to $300 trillion of stocks and bonds, most of which are overvalued or propped up by governments. Gold, all the value of gold in the world, and to me, gold has become useless in a world of Bitcoin, is $7 or $8 trillion. So I have no doubt Bitcoin will be worth more than gold at some point, probably a lot sooner than people think, maybe 10 or 20 years. So that's a simple number. Max Keiser's got his 100,000. If you use and forget 21 million Bitcoins, we're not going to get there for a while. Let's say you use 18 million. He's talking about $1.8 trillion. It's nothing.
Well, Yeah, well, we're getting there sooner than we think, right? People think we hit the 21 million in 2140, but we're actually going to hit the 21 million closer to 2040, actually, because that logarithmic curve of the Bitcoin. So it's really, really sooner than people believe. And the analogy of gold is really great here, because think about the Bitcoin miners. I can't remember the number. I think it's 17 or 20 million dollars a day worth of Bitcoin that they're producing. On the top of my head, I don't know, but set 15 to 20 million dollars worth of Bitcoin every day seems like a right number for some reason. And they're just dumping that on the market, right? Probably, I'm guessing 50% is a bare minimum, because they need to pay their expense, they need to pay their electricity bills, they need to pay everything. So that's like imagine like a $10 million injection of Bitcoins on the market. And if the price of Bitcoin stays the same, that means that we're absorbing this money with new hodlers, right? If the price stays the same and the Bitcoin miners are dumping, then we're absorbing this money. And then when the halving happens, then let's say that we have the same amount of hodlers. There's half of the same amount of money that we need to absorb. That is inflation. That is the inflation that we absorb. So it's just simple math, right? So as the amount of new Bitcoins entering on the market decreases by half, it's not at all to say that the price increases by half at all, because as we've seen, but it's just that the liquidity on the sell side dries up, and people that want to buy amounts of Bitcoins need to go further down in the order book, and they need to find hodlers, more hodlers that are willing to sell to them. So if you look at these are fundamental principles of Bitcoin. I mean, if you want to look at the long-term value proposition, just look at the Bitcoin issuance rate and just look at the Bitcoin issuance scenario and just see that every 4 years the supply drops by 2 on the market, and all things being equal, if the demand is the same, then obviously the purchasing power of that asset goes up. So that's, to me, that replaces all the TA in the world, right? The best Bitcoin advice you can give someone is just the inflation rate of Bitcoin.
Yes, and we're not even going to get going on TA. People know, look at my tweets. Look at my tweets today. What I think of TA, especially in Bitcoin, absolutely ridiculous because of all the factors you're citing and many others. But particularly, I mean, my view personally, and yes, that when we had the halving in 2016, the price went up. I mean, it went up from 300 to 800, but then bam, 6 months later, it went to 20,000. And there's so many factors involved. It's not the only one, obviously. But again, at the time, at the halving in 2016, the market cap of Bitcoin was like $10 billion. It was still a curiosity. No one knew what the hell it was. There was no institutions involved. It was coming off of a lengthy bear market, the Mt. Gox stigma. So it really was a non-event. And look at what happened in the wake of it. To me, when I look at this 2020 halving, as you say, I mean, it's getting closer and closer. And because the hash rate's going up and up and up, it's getting, it used to be the July 2020. Now it's May 2020. For all we know, it'll be February 2020, which means that just a year from now, people are starting to going to be looking a year ahead, which is what markets do. But I mean, I would say that right now, the way I look at things, the 2020 halving may be the biggest financial market event in history. I don't think the things that you're talking about are so unbelievably powerful, because now you're talking about much less supply, not just as a percent of the amount that's outstanding, but really tiny amounts of supply coming in at a time when institutions are in the game. Institutions are what's hodling right now. It's not people like you and me. It could be the Bank of Japan, the Bank of Switzerland, big corporations, wealthy billionaires. They're the ones that are taking it now. And in like a year and a half from now, they're going to be, they're going to be seeing half of the supply.
Yeah. And just so our viewers know, by 2022, about 90% of the Bitcoins will have been mined. Like 2020 is going to be 87.5% of all Bitcoins that will have been mined.
Okay, so it is even faster. So max is 100,000. It is closer to $2 trillion, which again is chump change on an absolute basis and on a relative basis to what it's competing against, whether you're talking about gold or stocks and bonds or whatever else is in the legacy markets. So again, I mean, absolutely monstrous numbers, it's so comical that anyone would listen to TA right now and get worried. Again, when I hear this thing with the 1,300, oh, well, it has to retest because 1,300 to me, there's only one way we hit 1,300. Someone hacks the SHA-256 and it goes from 1,300 to zero. It's not going to 1,300, and we probably bottomed at 6,000 because that's where all the institutions are sitting. So I want to ask you one more question because I want to keep it to the hour. And again, you started in the beginning with it. I want to give a proper introduction though, because we're talking about mining on and off during this call. Now, okay, to me, in the English-speaking world, at least, I can't speak for what's going on in China. I would say to my listeners that Francis might be the leading authority on all topics related to mining, based on all the things he does in his business. If you watch Vortex's show, you see he's often talking about how he's a consultant to corporations and entities around the world seeking to move their operations into Canada, their mining operations, because of favorable economics, whether it's subsidies or the cold weather and the hydroelectric dams, all that stuff. So believe me, when you want to learn something about what's actually going on in mining, he's the person you want to listen to. Now, I've seen all kinds of numbers about how much it costs. I mean, I heard that in Korea it costs $8,000 to mine a Bitcoin, and of course, in other places it might cost $1,000. So, what are the economics of mining at this price at 8,000 US? And what is the world going to look like, from a centralization or decentralization standpoint in the next 2 or 3 years?
Yeah, so the economics of mining are very interesting right now because they're very abnormal and unexpected. Well, to be expected, right, that there's abnormalities. But so when you're doing forecasting on mining, what you really want to kind of try to forecast is the relationship between the hash rate and price. This is what matters the most for a Bitcoin miner. And that is because regardless of the Bitcoin price, it will always be profitable for a miner to mine. There will never be a moment where Bitcoin mining is unprofitable in theory. Why? That's because the difficulty of the mining algorithm adjusts every 2 weeks, so that if the number of miners increases on the network, the difficulty will increase, and it will make the less competing miners unprofitable. But all things being equal, if the price goes up during a difficulty period, then it will become again profitable for some miners to come online. The same way that if the price goes down, it will become non-profitable for miners to mine. They will unplug their machines, driving the hash rate down. So we achieve an equilibrium where there's always a miner which is making money, and that miner will be the most competitive miners, meaning that it costs him the least amount of dollars to produce 1 Bitcoin, or depending on the way that the miner sees it, it costs him the smallest amount of Bitcoin to produce more Bitcoins. All right. So that's kind of the dynamics of the market in general. However, what we've seen is that when the price of, and one of the other observations is that, at Cadillac, my firm, we do extensive modeling, and our research or data shows very strongly that the hash rate follows the price. Price doesn't follow the hash rate, but the hash rate follows the price to a near perfect correlation over time, except for certain periods. So what happened is that the increase in price of Bitcoin, and we saw this coming from the end of SegWit 2x, right? So from about August, a lot of the savvy Bitcoiners knew that that was a time to buy because SegWit 2x had been defeated, USF had passed, SegWit was on its way, everything was going well. So the price, a lot of people started to invest in Bitcoin mining at that time. So, and as the price started to rise, that created a huge subsidy attracting all that hash rate on the market. So Bitmain started to produce a lot of S9s. All sorts of companies started to invest in ASIC manufacturing. Obviously, Halong, having sold it in November, had started working on it before. So did a few companies. So there was the bubble that we speak of, the 2017 winter 2017 bubble, subsidized a massive amount of hash rate on the market. But what this did is that when the price started to go down, the hash rate continued to go up. That means that people have already invested in Bitcoin mining. They had already bought their miners. The manufacturers are overproduced. Bitmain is dropping the price of its S9. More miners are coming on the market, so the hash rate is continuing to rise while the price is declining. So all our fancy mathematical models that we previously, we always knew at least for us, that are fancy mathematical models were basically voodoo that are trying to make sense of something, but nobody can predict the future. But I mean, this is something that was actually predictable and predicted to a large degree, but I was actually expecting the divergence between the hash rate going up and the price going down not to be this large. We're probably at so we did calculate that, but we're probably, I think, at the all-time high of divergence between the hash rate going up and price going down. So that's really bad news for the miners. So what that means is that the cost of producing Bitcoin is increasing a lot because there's more miners for a fixed amount of reward. So you're getting smaller share of the block reward, depending on where you are. I'm actually just like this morning, my Halongs just started to get plugged in, and I haven't done like my personal ROI analysis to reflect the new hash rate conditions in a little while. So I'm not exactly sure how much it cost me to produce a Bitcoin. And I'm also not exactly sure of what formulas people are using, because there's different ways to amortize the cost of your miner in your Bitcoin. Some people will say, oh, it cost me $2,000 to mine a Bitcoin because they're planning on reselling the miner for, say, 50% of its value later. So it kind of depends. But I would say that, yeah, it's mining right now is definitely still profitable. If you're running the world's most efficient miner, like the Halong miner, mining is profitable. So that's my outlook on the Bitcoin mining market. I mean, as a miner, I'm not happy. I'm super bearish. Actually, I think a lot of miners right now are probably thinking of selling their hardware. Probably one of the
Well, you know what you're saying, Francis, right?
Yeah.
I mean, it's pretty simple.
Yeah.
Competition is fierce and getting fiercer.
Yeah.
Decentralization is exploding. I mean, obviously,
Yeah.
you're seeing that in Canada.
Oh yeah, that's what it means, right? So that's the network security. That's the amount of workers hired by the network. That's like our workforce is increasing as a network. Our private army protecting us from double spends is definitely increasing. So that's definitely a super positive sign.
I mean, clearly it's making the cost of mining is going up because of this. It's increasing the floor on the price for people who say, oh, it's worthless. No, it's worth something. It has an actual intrinsic value, which is going up. And of course, there's some costs involved that's going to keep the people in the game. And then the thing is, people are looking down the road. If you got into mining, it's because you believe that Bitcoin's going to be $320,000, whatever number. So you're going to stick to it and just hang out as long as you can because you believe it's going to be higher. And so, I mean, to me, it's, again, if you're going into the mining business was difficult until last year for different reasons. It was because Bitmain had the Chinese subsidies and so they dominated. But now it's because everyone around the world is becoming competitive, and because Bitcoin is becoming so popular. These are absolutely amazing things. And it's, again, if Rocky Palumbo will tell you, people say all the time, oh, should I go into it? And Rocky's a miner. He says, no, don't do it. It's very difficult. Well, Francis is telling you on an institutional level, it's becoming more difficult. But for Bitcoin hodlers, it's becoming more amazing because it's making the network more secure.
Yeah, absolutely. And I would say that if you're a Bitcoin hodler, think about your opportunity cost always. So a lot of hodlers tend to forget that, right? So when you're spending money, even if you're not spending your Bitcoin, you're spending, you're incurring an opportunity cost of not purchasing Bitcoins. So that's also something that we like to teach at our workshop. So when you calculate your ROI, think about what your ultimate objective is. Is it to accumulate more Bitcoins? Well, if so, it might be worth to sell your miner and buy the dip, which, to be perfectly honest, if you think about it like that, I mean, I didn't do that because I want to be a miner. I like mining. I like the fact that I can say I'm a miner and participate in the network. But realistically, people that bought Halongs on the first batch, if they had sold them at the dip last week when they received them, so if they had immediately resold them, they would have probably just instantly doubled their Bitcoins, right? And doubling with a Halong miner right now, you would have doubled your Bitcoin, and one Halong right now is producing like 0.4 Bitcoins per year. Right, so you can double. Because Bitcoin is the same price today than it was when the Halong came on the market, but it was 1,500 USD, and now it's 3,000 USD. So That's hodling Bitcoin is now re-becoming, I think, one of the optimal strategies for people that want to get in the game.
Yeah, I mean, and to finish the thought, this is why Bitcoin is becoming money. Because it's becoming so secure and the cost of producing it continues to go up and the supply continues to go down. Last I looked, that was economics 101. So last but not least, Francis, absolutely amazing information. Biggest picture question of all, which you can do as long, you can have a long answer or a short answer regarding your intermediate term outlook for the Bitcoin revolution, to which I ask, what you believe when all is said and done on December 31st, 2018, what you think some of the biggest stories that will be remembered will be for 2018?
Oh, wow. That's a good question. I think probably biggest stories will be very large online retailers probably accepting Lightning Network. I think that's going to be big news this year.
Like Amazon? Like Amazon, maybe?
Yeah, like Amazon or like some of the sure, Amazon, Newegg, all those sites. I think there's going to be kind of a race for people to become first movers in Lightning adoption. I think one of the biggest highlights will also be obviously the whole mining ecosystem. So the arrival of the Halongs, the new chips that are coming out. So I think in 2018 we're going to see a lot of action on the ASIC manufacturing side, probably some 7 nanometer announcements. I wouldn't be surprised if a really large kind of industrial player starts to produce ASICs. I'm not going to name any names. I think Samsung, for example, has been known to use its foundry to make the Halong chips, but I think a big institutional player might announce a miner. What I expect, I think probably by December 2018, I think the biggest news will probably be the Bitcoin price rebound. I'm really hoping to see a price rebound at the end of the year. Although I can't predict the future, but I think the end of the bear market is going to be one of the big news. I'm not sure, there's so many black swans in Bitcoin. There's so many things that always come out of nowhere, left and right. I lose track of time because there's so much stuff going on. I think I don't know. I really don't know.
The answer was great. Of course, there's a million things that we don't know because who could have imagined? I was just saying the other day, if you asked me last June if SegWit would pass, I would say no way, and it passed in July. So things change quick. But it's what you said about Samsung. I mean, man, because I talk all the time. I think one of the stories is going to be we hear of the first central bank admitting that they bought it. Yeah. I don't think the Bank of Japan will admit it yet, but I think that that's a giant black swan that's just waiting to happen when people realize that they've been buying. But it doesn't have to be Japan. It will be some government somewhere for whatever political reason will announce it. Then you throw out Samsung, and I'm going, I mean, what could be more obvious than Samsung or Intel or some giant technology company becoming a Bitcoin miner? I mean, it's going to happen. It's just a matter of when. Can you imagine if Apple, which is the most loved company in the world. I mean, Apple and Amazon hold the keys to everything. I was talking about Amazon is about to announce its second headquarters here in the States, and I'm in Denver. So people here are hoping. I mean, this will be the biggest real estate decision in the history of mankind, where Amazon decides. And if Amazon accepts Bitcoin payments, or Apple goes into Bitcoin mining, or Samsung, again, we're talking about the halving being a big deal. This will be as big of a big deal as anything you'll ever see in a financial investment. But again, we will see what happens. My prediction from the beginning of the year was simply that the network will be much faster and cheaper than anyone could imagine. But you're talking about some other things too. All of them are good. I cannot imagine any negative black swans. But that's why that's why they play the game. And so if you hodl, you should be fine, and there's going to be all kinds of things going on. Let's look, but we're going to have to end it right now because this was absolutely amazing, Francis. Thanks again, everyone. Follow Francis at Francis Pouliot. Check out his businesses if you're looking to do anything related to consultation or wallets or mining. Cadillacsy.com, Bitcoin payments, BYLLS, bills.com. He is an all-around expert. I recommend him to people for all kinds of things. And again, keep watching the World Crypto Network because you're going to see plenty of him and me there. Again, I'm at cryptogoldcentral.com. And I'll end it by saying, have a great crypto day and recovery.
Bye, everyone. Thank you.